Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are on Wednesday, and this is the 27th of July, 2011, and I'm at 5:30 in the afternoon, and I'm late again, and I'm sorry. I'm here in the office. It's berry time, and it's not that there's so much business going on. There's so much in the way of commentaries going on, what you're going to be doing, where you're at. I have, and I said I would start writing my gold report. I didn't today. I will do it tomorrow and get it out tomorrow, abbreviated or full version. I already have an idea as to what I want to do in this report, and I'll just share with you with that thought in a moment here as we get on. But if you'd like a copy of the report, you call us 1-866-973-2077. Here's the guarantee. It's going to be hot off the press. I haven't even written it yet, and it's going to go out on Thursday, barring something happening. All right, let's go right to the gold market. And I think gold acted poorly today. I know you're going to say, hey, what's he talking about? You're at 16, 17 and a half. Market is up 20 cents on the day. It's hanging in by all-time highs. It made a new all-time high today, and I know all that. But what's bothering me is what's going on in the country. And the gold market, this type of pattern to just keep running, well, it can to a degree. Take a look at it back here, but you ultimately end up having to rebase and find a new level to work from. That's my point. I don't know how high is, and yes, I'm bullish, and yes, if you followed my trade recommendation, I've been recommending long positions in the market, and that's all fine and dandy. But when I blow the chart up, here's what I'm beginning to get scared of. Is this market needing to come back into this level or even lower to find a base? Now let's talk about some of the events that can make this happen. The thing you have to be careful of is that the U.S. doesn't get too much accomplished and investors just start selling everything. You think they'll be okay in stocks if they keep going down? Well, what they'll do is they'll step in and sell their other investments to either maintain that, to meet margin calls, whatever the heck they need, or they get scared out of markets. Number two, what if at the last minute the debt ceiling is resolved? Okay, you might get that knee-jerk reaction down in this market as the stock market comes back to life. Got to be careful. I don't know where you're at in the cycle, and that bothers me. And to get a top up at this time of the year and then drop back into August is something very much that I'm looking forward to. You heard me, forward to. I want you to be an ultimate buyer again. Why? The 18-day average of closes has crept into this general zone of the 1580 level. Now, from current prices, that's only going to be in the neighborhood of a $30, $40 break. But if you really look at the market, from this zone that it's been working in for several days, it finally broke out about 1608, and it didn't get that high. It got up $20. This is an awful lot of work that the market's doing to keep working higher. No, I'm not long-term bearish, but the market's looking, it just got the feel of being tired about it, and it's something I'd be watching if I were you. I do not want to see 16, 10, 30 taken out. It's that simple. In looking at upside momentum, you haven't even had the strength to get back up to a Bollinger Band. And now the band, instead of continuing to point up, which it was doing, and I want to show you that as of the close of business today, Wednesday, that I'm putting this out, starting to roll over even if the market's coming up. That's a little bothersome to me. And since the market's ahead of itself, I think the 1640s, that 1650 number, I talk $25 increments often in the metal markets, I think that's now a very solid resistance point. The giveaway on the market will be taking out the stochastic out of its embedded status and getting the red line under 80. Now, right now it's at 86.9. It'll take a pretty big break for that to happen. Okay, where's the first support zone? Well, it's going to be this 18-day average in the 1582, 83 area. So I already have an idea of what I'm looking for on support, and I'm also concerned about the long side of the market. Now, silver's been doing a nice job of making the continual higher highs and the higher lows. What you don't want to see it taken out now is $40.01 1/2. this break low back here, not where it's at now. That's 40.41. It's 40 cents away. The stochastics here are embedded. So in gold and silver, there is nothing wrong with saying it's time to be very protective. There's also nothing wrong with me saying both are in bull market patterns. You still have your embedded stochastic. You still got the higher highs and higher lows. But I think it's a great time to be respecting them because we're in an area that we've not been before. The idea of a U.S. default, no. One of the reasons I was late, I was on Sky Australia today, and I said it's inconceivable, and I still don't think it possible. Downgrading of debt, I do think can happen, and that raises real interest rates, the last thing we need. And I know you're not going to like what you hear, but I think that if that occurs, the QE3 program is back in front stage. Notice you haven't heard from Chairman Bernanke on much of all this, okay? And there's a reason. Somebody's got to be a white knight. And I think you're looking at the man that is just staying away right now. You got Geithner, Secretary Geithner, going on pleading his case. You got the president pleading his. Harry Reid pleading his. Bonner pleading his case. It's a comedy. It's nuts. I like what copper's doing. Copper is taking itself out of this wide Bollinger Band. Remember what a Bollinger Band is. The black lines are an algorithm designed to keep the market trading within it 95% of the time. And we're starting to develop this sideways action. You know I love the sideways action because from it often comes a trend. Right now, I don't know. The trend is up. You're at the resistance points. I think it's very hard for anyone to buy the market up where it's at right now. If you look at today's high going to it, the high was 448.85, just about at the Bollinger Band, 489.20, and now you're backing off a little. Support's going to be, I think, the 440.90 zone with 437.05 is one of the numbers that if you get under it, you change the trend. The problem with all of this is this unknown as to the debt ceiling. Do they do something at the last minute, August 1st, over the weekend to stop that? How does the market react to it? Instead of trading the chart, you're starting to trade that piece of information that you have no information on. I hate that. In the crude oil market, this was a sell-off today of good-sized proportion. Know that the momentum is turning down. The market was down a couple of dollars today, and what it's doing is the $100 area is becoming an area that looks like a trading top. However, the $95 area looks like the support area in the market. And the longer it can go sideways here, the bigger the ultimate move gets. Which way will it go is the question. You're correcting an overbought condition. You're still in an uptrend until you take out 95.05. You are under the 18-day average of closes. Even if you bought the 18-day average, your risk is almost $2.70, $2.80. If you figure that out, even on a mini contract, the risk is too big. It's a good time to be doing nothing. The gold-silver ratio, which I'm showing you right here, hasn't gone anywhere recently. Just broke out to the downside. Hovering sideways, this favors silver ultimately over the gold because as long as this keeps dropping generally down, you need less ounces of silver to buy an ounce of gold. In the rebob gasoline, still a bull market that now, repeating it 3 times, is losing its embedded reading. Again, have you seen this market go anywhere? I want you to look at that. That's total sideways action. The market has, I'll call it, a bullish bias. It's not to be traded just yet. Supports 305.70. I wouldn't want to see prices under 304.84, but you've lost the embedded stochastic tonight. You have to rally much more than you're at now to get it back into that number. You're getting signs in all these markets that I'm watching that have been going sideways that maybe more of a correction phase is needed in them. Here is the stochastic turning down, as you can see, and this is the Brent crude. So the market tonight down 85 cents on the day, and even though it's got the pattern of higher highs and higher lows, remember what I tell you, often, it doesn't have to be all the time, and sometimes it can be a false signal, but often when that stochastic loses an embedded reading, it's ahead of the market, especially if the market keeps going sideways. This is, to me, an important rule. Does it mean you get bearish? No, it means you're out. Can't make it any clearer. This is, to me, another untradeable situation. So what I'm seeing in the marketplace, like it or not, is our markets that are getting themselves into areas that are areas of concern. The areas of concern on the chart are coming very clearly from the events taking place in Washington. We still don't know what the Greek situation is. If you think you do, Which way is the ECB going? Is Trichet doing what he said a month ago, and if there's any form of a default, they're not going to take Greek bonds? Or has he changed it, and suddenly he's one way, but I'm hearing from another member, if you read the news, that he's saying, no, there hasn't been a change on that policy. The messages are so mixed and confusing that traders are starting to dump things. It's one of the reasons the stock market was down so much today. And I mean, if you look at the weekly chart on the S&P, you can see how hard it got hit. You can see how hard for the week we're down 3% already in the NASDAQ, and for the week you're down 3% in the Dow. Do you think these markets are working on what's really going on right here, or are they looking at Washington? And my bet is you're looking at Washington. This is an unknown territory, and it's like going into a major report. In my trading course, and if you go to our website, www.iraepstein.com, under education, one of the things I teach is when you have a major report coming out that the market has determined is major, sometimes employment reports aren't as important as others. Other time, everybody's looking at that as the big number. Well, right now, everybody is looking at what the U.S. is doing, and that is a major report, and there's nothing wrong sometimes with the sidelines in front of that. I'm a broker. I don't make commission by telling you sidelines. You're hearing what I'm saying. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow, I hope, at a much, much more reasonable time.